All right, hello everyone. Welcome to episode number 91 of Going Live with Good Soil. Um, doing this a while. We're on YouTube Live and our Good Soil Investment YouTube channel and on Twitter Space at the same time. Sometimes we have a little difficulty getting it set up. I have my volume muted there now. Okay, uh, first things first, macro market stuff. CPI is next Wednesday. I feel like it's like Groundhog Day with these CPI prints and the Fed meeting every like 2 weeks. There's like a big macro event with, Powell. What's he going to say at the Fed meeting this time? Or CPI, what's the print going to be this time? It's just, I don't know. It's just, what is there anything different that's going to happen from the CPI print, Matt? Do you think it's going to convince the market that interest rates are at the top and they're going to come back down? I mean, it seems like the market's priced in that we're at the top and there's going to be like 75 basis points of cuts by the end of the year. That's currently where the market is priced. The Fed futures are, being priced at. But do you think that's going to be more convincingly priced in or more aggressive rate cuts for
Yeah.
the rest of the year if CPI is better than expected?
Well, that's what I was going to say. Is it seems like the market is already expecting at least that the Fed is going to change course, which they have not really signaled. So there is this kind of tension between what the Fed is saying and all the governors who have these various press conferences are saying, we've got more hikes to go, and it's going to be higher than people think, and longer than they expect. But the markets are really indicating that we've essentially reached a top, or are going to very soon, and there's going to be cuts cut from here. So thinking about like this next CPI print, it seems like there's more room for equities to be disappointed. If there's a really high inflation print, for example, then there is, like, let's just say it was flat or it even had a negative handle. Like, I don't think the markets would necessarily rally like 10% from there in the next month or something like that, because they already have rallied pretty strong so far this year, and they're only down, I don't know, maybe 12-15%, I think, from the all-time highs, if you look at the S&P, for example. So I don't know, it seems like there's increasing downside potential if we have a really bad inflation print. Now, I don't think there will be a bad inflation print, but it does make me worry a little bit that there's the bottom could presumably fall out a little easier than the top could rally another 20% or so.
Yeah.
Kind of my
Yeah, I
take.
agree. I agree that there's more bad can happen from the CPI print than good. Now, I don't think there's no good that can be happened, but I think, yeah, if it's surprisingly bad and month over month is, I don't even know what the expectation right at the moment is. I can go to the Cleveland Fed, forecast site, but if it's, let's see what that is.
0.3 or
Cleveland.
something like that, I think.
Yeah, I think so. Nowcast, they call it. Inflation nowcasting by the Cleveland Fed. So yeah, the March 2020, the CPI has 5.2%. That's the
Year over year.
year over year. Yeah. So
That's
that's, I
down
guess,
quite a bit. I mean, what's
month over month is 0.3%. So yeah, if it turns out that the month over month is 0.5%, for example, or 0.6%, like wildly, I think the market crashes easily 5 to 10% in the coming days after that. Just it's like,
yeah.
oh crap, the Fed really lost control, and market's the whole economy is going to get crippled when the Fed raises rates even more. So I think that's
Yeah.
the bad, you know, um, news that could happen, but I don't think that's going to happen. We'll see. If it comes in at, instead of 0.3, if it comes in at 0.1, like you said, Matt, if it's better than expected substantially, maybe the market, begins to or continues momentum upwards a little bit, drifting upwards, but I don't see like a 5 to 10% rally in 2 days or something like that.
Yeah, it's interesting. I was just doing the math while you were talking on what is the annualized inflation if the month over month is 0.3%, and it's a 3.7% annualized inflation rate. So
Yeah. Yeah.
I don't know. To me, it seems crazy that we're talking at all, or the Fed is talking at all about raising rates from here, given I'm just hearing so many more anecdotal stories about layoffs. At Ford, my sister-in-law is a nurse, and there's a lot of stuff going on in that industry apparently. And
Yeah.
the economy is definitely kind of showing signs of some weakness, at least on an anecdotal basis, from a lot of the stuff that I'm hearing.
Yeah.
And it's like it's almost like the Fed wants to be sure that they break the economy before
Yeah,
changing
it's like they
course.
really want there to be a big crash and recession. But the latest Atlanta Fed numbers yesterday came out, and they predict Q1's GDP increase of like 1.5% or something. It was like 3% or something, where they downgraded to 1.5%, but it's still not negative. Like, so are we gonna have a negative Q2 GDP and a negative Q3 GDP for 2 quarters? I mean, we already had a technical recession like a year ago when it was like 2 quarters. No one wanted to
Yeah,
call it that. I don't know why we all dismiss it, but it feels to me from this point forward it's more of like that rolling recession term that has
yeah,
been thrown around. Remember we talked about that a few weeks ago, the rolling
yep,
recession term, where you have different sectors hit recessions at different times. So it doesn't happen to be a whole macro market recession in terms of the overall GDP for 2 consecutive quarters of negative growth, but it hits in different industries. Like maybe it's hitting the real estate industry, the software industry, the car industry, the financial industry, different sectors at different quarters, and it seems like there's this kind of like right now, the financial industry, the banking industry is having like
banking
its
for
own like
sure.
recession. Yeah. So maybe next quarter it'll be the recession will hit commercial real estate hard finally or something, but overall the whole GDP is still positive potentially. And I think that leads us into the second kind of big macro market, I think, thing that this is not really a macro market, but it's a topic I think we're going to be talking more and more about. And I think it's important to bring it into the conversation now just to get ahead of it and figure out what this is doing to the overall macro economy and how it might be reflected in the markets. And, this ChatGPT technology, borderline AGI, so this is clearly not just a novelty, it's hugely impactful for lots of jobs in software and software engineering already. Like I saw uh, um, a tweet saying like there's only two types of jobs now, like software engineering and prompt engineering or something like that. So
Hmm.
it seems like there's a whole new production, capability of the economy through this quasi artificial intelligence, super artificial intelligence being, coming about with the AGI, with the chat GPT, and Google has their Bard, and, you know, um, there's a lot of these technologies coming out that are going to change industries very fast. I mean, do you think that this is going to how do you think the macro markets, that's what we talk about here in the markets, like, how do you think the macro markets process this? How do you think, do you think they process it as a group, or do you think there's just individual stocks that become outliers of this, or what do you think, Matt? Have you thought about this much?
Yeah, I mean, so I might maybe just tell a little story of my own experience using it, and then I'd love to dive into that a little bit more. But like I've always felt very kind of safe in my own career, just because I've like I was an investment banker and worked in valuation for a long time, and like got drilled into me like a lot of very super technical finance stuff that I think I understand at a very deep level. But I was just playing around with ChatGPT last week, and was just asking it to do some stuff that I didn't think it would be able to do, like pulling historic multiples, like EV to EBITDA multiples or PE ratios, and putting it in a table for a bunch of different comparable companies. And to my surprise, it just like spit it out like perfectly within 5 seconds. And this is like a task that I asked it to do that I remember when I was first starting my career in New York, I would have to go to the Bloomberg terminal, and I'd like get like the price information for each one of these companies, and I'd have to print it out on a sheet to like save it for our records. And I'd like just pull all these things together, and then you like put all of those and you put them in an Excel file. And it was kind of like entry level stuff for a finance person, but still like very time consuming, and you had to get it right and you had to know what you were doing. And for it to do that, which was like a task that I spent a lot of time early on in my career doing, just like flawlessly and immediately, I was like, oh gosh, like it's only a matter of time before it's taking like higher and higher kind of levels of my own profession kind of away. So to me, it was really eye opening that, I don't think anybody is safe. I think, we've talked about like software people being more at risk, or, data entry, paralegals, that sort of thing. But I think it's going to show up in a lot of different industries in ways that people aren't expecting.
Hmm.
In terms of how the market is expecting this to go right now, like AI is such a like an overused buzzword that I think
Yeah.
it's kind of lost a lot of the meaning. At the same time, it's like a very real topic. Like the VCs are taking this very seriously. I know you and I are taking this very seriously because it's I mean it's kind of been at the underlying the Tesla thesis for a long time, at least on
Yeah.
full self driving, and certainly
Real world
on
AI. Yeah.
Tesla bot. But there's lots of different applications for it. And I really do think it's going to be economically useful. I think the surprising thing for me was like Chat GPT. Like, so I used Dolly a lot, maybe 6 months, 12 months ago. And that to me was just like a flash in the pan. It's like, oh, this is so cool. I was like
Yeah.
obsessed with it for a week, and then I never used it
Yeah.
again. Because
Yeah.
there's just not a whole lot of economic utility from
Yeah.
generating pictures.
Yeah. Not unless you're like a
But
comic book writer, sci-fi comic book writer, maybe, or something.
yeah, there's like niche use cases. Like we were playing
Yeah.
around with using it for thumbnails for a while, and ended up like just not really working out that well.
Yeah.
Um, so like not economically useful, but the stuff that ChatGPT can do is economically useful right now. And the fact that we're even talking about, like, I don't think it is AGI, but the fact that we're even talking about it as it could it even be AGI, or could it be a precursor to AGI? That to me is like a very big step that we've been taking. So yeah, I think in terms of the market, and like how the macro is, or maybe not macro, but how market participants are thinking about this, I think nobody has a clue right now.
No.
I mean, it kind of reminds me a little bit of like what was going on in the space industry a couple years ago. Like I had this whole thread about a year ago about like how none of the valuations in the space sector made any sense. Like Virgin Orbit was valued almost exactly at what Rocket Lab was. And I was like, that makes no sense because their technology is just like a disaster. Sure enough,
Yeah.
now they're like bordering on bankruptcy. So we were kind of right
Yeah.
about that. But like AI, like I still very strongly believe in Lemonade, which is using AI and have been for years. But
Yeah.
like they're down in the dumps. Meanwhile, everyone's kind of like hot on Microsoft, and a lot of like the VCs are very hot on this space in general too. So I
Yeah.
think nobody really knows. It's like people are excited about it, but they don't know like what is going to be the next real thing. So it's
Yeah.
a lot belabored answer, but I think there's still opportunity in the markets. Is kind of my sense.
Yeah, lots of cool opportunities. We're seeing it first with anything software related. Like I see Jay Lizard in the comment section. They have earbuds now that translate in real time 40 different languages. That's pretty amazing. That used to be like a sci-fi movie feature. Like you'd be like, oh, in the future you'll be able to just not have to worry about language. You'll have AI just translate real time for you in your ear, and now that's there. I mean, you'll have all, and that's all software enabled. Like it's not really real world AI. When I think of the term real world AI, I think of like physical objects being
Hmm.
affected, like self-driving for Teslas, or robots moving in the real world, or drones, doing things, like that's real world AI to me. But I think the software based AI applications are going to accelerate so fast and transform anything software related that can, done purely with software that's not involved. And at the limit, if you talk about the soft tech, like not the hard tech, the soft tech applications to this new, neural network transformer technology, that at the limit, you can imagine a world where, Google, which is like strictly software, Facebook, all software stuff, oh, I guess they have their hardware Oculus you can wear,
Yeah,
right? But and Google has like, maybe a couple goggles or whatever, but a lot of companies are just like software based companies that do only things in software, right? And they make their
yeah,
behemoths of companies. Well, at the limit, all of the jobs at those places can be displaced and eradicated. So
hmm,
by this AI. And at the limit, this is the limit, the hypothetical limit. At the limit, these software-based companies can just be, one or two people or a handful of people directing the AI to do different things, and thousands, tens of thousands of jobs, maybe hundreds of thousands of jobs in case of Google or Facebook, if that's how many employees they have now, would be lost in that sector. So it's almost like a recession in the employment, but the stock, imagine the stocks of those companies, how profitable, wildly they would be, right? Those software
yeah,
stock companies that are already behemoths, all of a sudden you have zero headcount practically, and you pay a couple of AI engineers. I hear the top AI engineers are being paid the same price as NFL quarterbacks these days. Well, maybe you have the top AI engineers making $100 million a year now, whatever. There's just a few of them that just do
yeah.
everything. And you have a couple companies like Google, multi-trillion-dollar company with no headcount, and it's just you own the stock and it's gone
That's
up
crazy.
crazily. I can imagine. But at the same time, there's like a recession going on because tons of these tech workers are unemployed now and trying to figure out what to do, become, real world workers and plumbing or, electricians or whatever, trying to do things that AI can't do yet. Because I think the real world AI applications using the bots and all that stuff, that's like the next level. That'll take longer. So I think the software companies are ripe for major disruption, and it could be crazy for the market to digest how this kind of like rolling recession affects them and the stock profitability of some of those stocks, maybe.
That's a really interesting thought, Emmett. And as you were talking, it kind of sparked in my mind. It's almost like the reverse of what was happening, 10, 15 years ago when, all the US manufacturing jobs were, being eliminated or, shipped overseas or automated away. And there was that, kind of advice which became almost like a rallying cry. It was like, learn to code. And so it's like, oh, you got some
Yeah.
blue collar guy that has a high school diploma or a GED. And like, the criticism, I'm not saying I agree with this. I think it actually comes from a good place, but the criticism was like, oh, you're telling that guy to go learn to code and like that's going to be the way that he saves his career. It's just like
I
that,
remember that.
you know. So, but that became almost like a meme. But now, in the scenario you just painted, it's like the opposite. It's like all these like super smart like you know
Coders.
masters or like coders. Now it's like, oh, learn to plumb. It's like
Yeah. Unless you're at
like
the
go
top,
back.
unless you're at the top 0.0001%, like unless you're like an artist or a baseball player that's the top that can make it to the major leagues,
Yeah,
then you basically have to figure out something else to do with your time. Your coding capability, even at the top 1%, is not enough to get one of those top AI engineer
yeah.
jobs.
Yeah, and I don't think that's necessarily a bad thing. I mean, I spent a lot of time working with blue collar people in my time in the energy space, and I actually loved like the work that they did, and they're out there every day working with their hands, and just have a real sense of pride about the work that they were doing. And for the most
Yeah.
part, they were just really good and hilarious people, and I just had a really great time working with them. And if you do well and put in your time and learn your craft, you can absolutely earn a lot of money. I mean, a lot of the plant managers that I was working with were getting 150,000 plus a year with just a high school diploma, but they spent
Yeah.
20, 30 years learning what to do and got very good at it. And so it's and there's a huge shortage of like skilled trades, like welders, for example. Is like skilled welders are in just tremendously short supply. And so I think it's wouldn't be the worst thing in the world if this is the way that the economy unfolds a little bit. The one thing I
Yeah.
do worry about though is if you've got X percent of people making, $100 million in a year, and 20 million, whatever it is that the top
Yeah.
AI guys would be making, and so many more kind of like middle manager types are have to like move down from their pay grade, then that's destabilizing from like a political
Yeah.
perspective and from an like
That's
entire
true.
societal perspective. So that could be
Yeah.
a bigger detriment than the efficiency gains that we could be reaping.
Yeah, yeah. If it happened all at once, it might be like a 5-year process, is my guess, but we'll see. And that's still pretty fast, a 5-year process for that to happen, kind of. But I'm not sure it'll go to that limit, but we'll see.
Yeah, the rate of change is
So,
accelerating though, and that's kind of a scary thought. It's like
yeah,
it reminds me of that Tim Urban drawing from like, I don't know, 10 years ago or 5 years ago, whereas like, there's the rate of change and it's kind of like a linear looking and it's,
yeah,
saying you are here essentially. And it's just like a vertical like
yeah.
progress
Right after
from
that,
there. And it does seem like we're right at that inflection point right now where things are really accelerating in a way
I
that we've
know.
never experienced before.
Yeah, yeah. So let's move on to Tesla. I mean, everyone. We'll talk more about this new technology, the Chat GPT. We're calling Chat GPT. It's not just Chat GPT. It's that technology genre that's accelerating fast. The neural network transformer combination AI technology. I don't want to call it just AI because AI has been such a general term, but it's like the new type of AI technology that's evolving right before our eyes is going to change the world quickly. And then macro markets and the economy, how are they going to digest it? We'll talk a lot more about that I'm sure in coming weeks. But we'll move on to Tesla. Um, our reaction to Q1's production deliveries. I mean, I was saying 440,000. You thought that was realistic too, and it turned out to 422 or 423 or something. Is that right? So
Four
they,
twenty two. Yeah. So
yeah, they produced
that was
440, but they only delivered 423 or 222.
and just to clarify, we thought 440 was possible from like a bull case scenario, but for the scenario we modeled last week, it was 430. So our base case was
Okay.
430. They came in at
Yeah.
422. So from my perspective, kind of mildly disappointing, but really right on track with what
Slightly.
Troy TSLAQ was saying.
Yeah.
Right on track with where Wall Street was, slightly higher
Yeah.
even than where Wall Street was. So I don't
Yeah.
know. I found it like it was okay. I don't think the stock necessarily
Yeah.
deserved to fall 6% yesterday or whatever it was, but
Yeah.
it seemed like modestly okay. Not a huge surprise either way. Do
Yeah.
you
I thought
have?
so. I mean, I thought that they deliver about what they produced. I thought they produced around 440 or 450, and they deliver 440 just because, even though that was sort of my base case, or what I really expected as likely, because I just thought last quarter they had 50,000 more cars produced and delivered or something, like, I think that's what it was. And so I thought that backlog would be caught up to some degree because it was sort of that lag before they cut prices in January. So
Mhm,
I'm a little worried about this backlog growing, if I have to be honest. Like, at the current price level, I mean, this demand is infinite is hogwash to me. Like, that demand is not infinite. At zero price, yes, the demand would be infinite, but the price is $40,000 for a new Model 3 or something like that. At 35,000 or $30,000, the print demand might be double at 30,000 versus 40,000. I don't know the exact metric, but it increases proportionally as the price goes down. And so that's just like the law of rule 10, like this 101 microeconomics, supply and demand. So, and price elasticity and all that. So I'm a little concerned that this backlog is growing. I saw some incentives being offered at the end of last quarter to help try to motivate buyers to come and take delivery before the end of the quarter. People were getting texts that saying like, "Hey, this might be your last chance to get the incentives for the IRA after March 31st. It won't be, so there's lots of, I think, levers they sort of pulled at the end of the quarter to try to maximize deliveries to occur. So
mhm.
I'm a little concerned about them having to lower prices again. Um, I think that it's not, I would put it 50-50 that this quarter or next quarter, they're going to lower prices again on the Model 3 and the Model Y by, maybe 10 to 15% suddenly, or maybe 20%. Elon seems to do these things in large cut. I don't think just because they want to ship the product that they can build more capacity of. They don't want to slow capacity growth
Right.
just because there's not enough buyers. So I think they want to maximize living up to the mission statement of Tesla, accelerate the world to, EV, sustainable transport. And if that comes at profit margins, so be it. They're accelerating the world by shipping more product. So I think that's the
Yeah.
mindset Elon's in. I just wish there was a different way they would go about doing it and just try some advertising. I was watching the NCAA championship game last night, and I don't watch a lot of sporting events lately, but I don't watch a lot of national TV. But I was watching it last night, trying to get my kids involved in it, and I saw like a bunch of car commercials for like GM and other things. I'm like, why can't Tesla just do like a commercial showing like how safe the car is? Like, I don't understand why they don't do that. Why they refuse to do that? Like how safe electric cars are compared to gas. Like how safe the Tesla car is. The efficiency of just charging at home every night. They could do it in 30 seconds and get so much across. And demand, I think if they did it a few times, demand would increase so much where they wouldn't have to ever lower prices again for years, maybe ever. Like for the Model 3 and Model, it would get them through till the next gen car is ramped up. That's what I think.
Yeah.
And they don't even want to test it. That's what I'm disappointed. I think it's like out of principle, like Elon's principle, like, I don't want to ever have to advertise traditionally because I hate that other car companies have done it and trick people, and I don't want to participate. I just think he's I don't know. I'm just bummed about
Yeah.
that a little bit.
Well, we've been banging this drum for a long time, and on Investor Day they're saying, oh, we've got like way more demand than we can handle now. So like, I need to. What did Elon said something to the effect of like, we're putting a definitive end to the demand question or something like that. And it's like, I would love to give him credit for that, but it seems like the data is once again kind of contradicting these statements from Tesla. So it is frustrating that they don't just try to dip your toe in like spend $50 million on it. Like we said, just try it out, see how it works. And if it is not a good use of capital, then for sure, like stop and kind of just do things the old way or cut prices. But
Yeah.
when we're in this environment of Elon is very much fearing a recession, it sounds like, and the interest rates are making cars, unaffordable, as he was saying. And at the same time, you're ramping up supply globally in a really significant way at a time when demand might be collapsing. And so then, like, the combination of those two things means your prices are going to get really hit hard in order to sell, if you want to sell all the supply that you have. So
Yeah.
just as a way to, like, we're not saying you'd never cut prices, but there's probably some way you can, spend 50 million on advertising in order to avoid having to, give up a third of your gross margins or something like that. So,
Yeah.
I mean, that's really all we're saying.
Yeah, and I see Stu in the comments is saying Musk said that demand was 2 times production on the earnings call, and maybe for a short period that was the case. I mean, that's not probably not misleading or false. Maybe for like the
That
couple
was in
weeks
early
after.
January, like right after the
Yeah,
cuts, though. So you got to keep that
yeah,
in
right after the
mind.
cuts, that's going to come back down over time, right? It's going to stabilize again at a certain level, which seems to be maybe below production capacity or where production capacity is growing to, especially, unless the macro economy comes out of recession quick and everyone has a lot of bonuses to spend on new cars or something like that. It doesn't seem like we're going in that direction anytime soon, though. So I
Yeah.
think you also have to think about it this way. Like, I wish Elon would think of the bigger, big picture here. Like the bigger, big picture, forget profit margins, forget advertise, forget all that. The bigger picture, big picture is Tesla is a behemoth of a country. It's a behemoth of a company. It's leading the world in EVs. Okay, it's leading the world. It's the face of the EV transition of the world. Right. It needs to take some responsibility that it's earned being that leader and set a good example. Okay, like why don't they just take that first step and show the world, like, hey, we can educate you in a traditional way you're used to being educated or tricked or advertised or whatever. We can do some of that too. We are the leader. Let us show you what EVs are about. Like it's their like if Tesla is so wildly profitable, let's educate the world a little better, right? And accelerate EVs, the world mindset to EVs a little better, instead of just like doing what they're doing. I just think it's sort of a responsibility Tesla has in the bigger picture to do some of that too. Like forget profit margin, forget all that. It's just like it's sort of
Yeah.
irresponsible in one way to think about it in my mind.
They've had some really great like videos and like short clips on Twitter lately. So it seems like they've actually been doing a really good job of creating the content, that kind of explains some of this stuff to, people who are not in the Tesla bubble like you and I.
Yeah.
But it's not like they don't need to convince us anymore. It's like everybody that follows them on
Yeah.
Twitter, like
Yeah.
that's not the target audience that at this stage of their
Yeah.
growth they really need to be focusing on. It's
Yeah.
it's like the kind of early adopters, but not the earliest adopters. It's like the early followers or whatever that kind of cohort is called.
Yeah.
Like we're at a stage of really needing to scale up, and like it's possible that they really do have more demand, and this is really just kind of ending the delivery wave. But at least for like the Model S and the Model X, probably the Model X in particular, I mean, they delivered only like half of what they produced in the quarter. So to
Yeah.
me, that like there's almost no scenario where that makes sense. That oh, we had
Yeah.
enough demand, but we just decided to keep like 45 days of inventory on hand, because like it just doesn't make sense. So
Yeah.
I think there's very clearly a demand issue, at least for the higher end products, and probably also for the Model 3 and to a lesser extent the Model Y.
Yeah. Yeah, I mean, I'm not as a long-term shareholder, I'm not worried. I don't want the perfect to be the enemy of good here. Tesla's still an incredible investment, but if they want to do better, they need to get on their horses about educating the general public in the world, not just the people in the
Yeah.
Tesla Twitterverse. And they can't rely exclusively on us in the Tesla Twitterverse to educate the rest of the world through grassroots efforts like we've been doing. That's not going to fly for. I mean, it's going to continue to happen, but it's just going to be slower, adoption than otherwise would be if Tesla you really took the lead here and said, okay, let's help educate the public in a much more conventional way that the public's used to being educated.
Yeah. Yeah, for sure.
So, all right. So the sentiment, I think, after the production the trading sentiment, we're down a little bit today. The Nasdaq's down 1/3%, it's almost flat. Tesla's down. 1.5%. Not a huge sort of noise today. When Tesla's up or down 1 or 2%, I almost think of it as like a noise day, not really too meaningful. Like it's hard to interpret what's going on, especially when the Nasdaq's up or down less than 1% at the same time. So, but I do think that the deliveries being, where they were, not some big beat on consensus, it wasn't like 440,000, 450,000. I do think because deliveries were sort of it was like people were not really surprised either way, that I think there's a lot of air taken out of Tesla going into earnings because I think people are worried about profit margins. And so I think that's the main thing now is like, what are profit margins going to be? How low are they going to be? So I think there's some
Yeah.
negative sentiment on Tesla stock for the next 2 weeks until earnings. And I wouldn't be surprised to see us trade down, short term. I'm just speculating here, 160s, 170s, worst case, but I think 180s is most likely if the Nasdaq isn't moving too much up or down. That's my thought. And then earnings. The good news is I think earnings hopefully is somewhat solid and reinforces everyone like, hey, Tesla isn't sacrificing as much margins as we feared. They sacrifice some margins, but not as much as people are probably going to fear going into the earnings. And then the stock kind of rebounds. So, but that's sort of my thoughts of what we're doing short to medium term. That's if I had to guess. You have any? What do you think about that?
Yeah, I think that could be the case. There doesn't seem to be any kind of significant rally that could take place, other than if it's something macro related like CPI next week. But so I updated our model that we walked through last week with the numbers, and then the other change that I made is I actually brought the services gross margin down because used car prices have been hit really hard. Which was something that we were actually expecting to happen in Q4, but it actually didn't. The services gross margin improved. So when I put all that together, I was coming up with 85 cents. I think we were at like 91 with our previous version. And the street right now is at like 86. So I'm pretty much right in line with Wall Street, which I don't think I've ever been in the history of, of me doing this.
Yeah.
But I mean, I think if they come in there, like, I don't think the stock will necessarily move up or down. I'd have a hard time kind of imagining Tesla posting like 80 cents or something like that, which would really hammer the stock kind of post earnings. But if they surprise, I think there are very legitimate scenarios which could pan out where the earnings could be more like 90, 95 cents, and I think that could be the kind of trigger, especially if there's not a lot of if it's a good quality earnings beat. Like the automotive gross margin X credits is better than expected, which I think it could be because material costs have been really coming down quite a lot lately. The plants are going to be more highly utilized. So I think there's some kind of deflationary forces that are impacting Tesla's supply chain right now. I mean, energy prices is another big one. That was a huge factor for Giga Berlin. And when we've really seen, natural gas and electricity prices come down. So it wouldn't surprise me if we do have like a modest beat, and I think that could, rally the stock, well into the 200s. But yeah, we'll see. I think I agree with your general range though.
Yeah. Yeah. So that's just 2 weeks from tomorrow, right? The earnings report, 2 weeks from tomorrow.
Jeez.
So that's coming
Yeah.
up fast. Yeah. And what do we think gross margins are going to be? Automotive gross margins before the credits. What are we thinking it's going to be like in the range? What, like 16 to 20% or something like that? 16 to 22% or something like that? Is that the kind of range? Or if you had to,
Let me do that math here real quick.
like, what would that's the big thing I think that's going to be the key metric everyone's going to look at, I think, the most and focus on this earnings report is what are the
Yeah.
automotive gross margins, minus the regulatory credits.
So I just calculated 20.1% is kind of what we're expecting. So
And it was as high as like 27 or 28% or 29% one point, wasn't it, last year?
yeah, like last year in probably Q1 and Q2. Maybe I don't have the X credits, but yeah, I mean it
Yeah.
was. I think the actual reported gross margins were over 30% for maybe 1 or 2 quarters.
But that was with the regulatory credits,
That
right?
was with the regulatory, but I think even if you back those out, it was like 28, 29, something like that.
Yeah. That was the highest it's gotten, basically. So we're coming down to 20%. I think 20% is sort of like if you could beat 20%, that's going to be hopefully interpreted positively by the market. If it's between 18 to 20%, I feel like that's sort of expected. That's my thought process. Below 18%, maybe the market's like, it's not so good that Tesla's lower in prices so much, you know?
Yeah, yeah, and Zach Kirkhorn gave guidance that they'd be over 20% gross margins, not X credit, but just automotive gross
With the
margins.
credits. Yeah. Yeah.
So I think it wouldn't, and that was like the floor, and that was in direct relation to a question. So his own model may say 22 or 23%. We just don't know.
Yeah.
But I don't know. I think I still don't think that the market really understands how massive these IRA credits are going to be.
Hmm.
I mean, that's like once the 100 gigawatts 4680 stationary storage cells are built out in Giga Nevada.
Yeah.
That's like we did the math at one point. I think it's something like $5 billion a year of credits just just from that one site,
Yeah.
which is crazy. No, it's 3.5 because it's 100 times or 4.5, so 4.5 billion. Um, just from that. But then you've also got the Giga Texas 4680, and then you've got any other stationary storage, and then you've
Yeah.
got the 10 kilowatt hours for the pack assembly that you get on even the non-US cells. So there's just like a huge amount of things that are going to be flowing to the bottom line. That I think one of the criticisms with the why you do this X credits thing in the first place is because like the ZEV credits, everyone's like, oh, those are going to wind down over time because the OEMs are going to come in there and build their own EVs. And to some extent, you've definitely seen that happen. Certainly, if you look at credits on a per car basis, they've been walloped. Maybe it's like 10% of the value that they used to be.
Yeah. Yeah.
Um, but so like that's like a legitimate thing that the analysts are doing is stripping out those credits. But with the
Hmm.
IRA credits, like the exact opposite thing is going to happen. These are going to be like growing over time. They're going to stick around for at least a decade, and they're going to be really impactful for Tesla. So it's maybe there will be a focus on X credits this quarter, but I think we're going to see a pretty meaningful amount of IRA credits as well, and we may have some different breakout because some percentage of these credits are going to go on the energy side as well. So it'll be
Hmm.
interesting to see how those will be broken out. But I don't know. It's
Do you
there.
think it'll be meaningful for Q1, or it's more meaning? Well, it's obviously gonna be more meaningful as time goes on. But do you think it'll be
Mhm.
very significant for Q1 already, or it's gonna take a while for like things like the Mega Pack and 4680s to ramp
I,
up? Really?
I think I think we were estimating about 150 million in credits this quarter,
Hmm.
and that seems about right based on the guidance that Zach said, and we've
Yeah.
done some math too on okay, what's the current run rate of their 4680s, and how many so how would you estimate those, and then also on the stationary storage side, there's credits even on the solar side. There's credits. I mean, those will be really rounding error, but um, there's just like when you add it all up, it's probably on the low end. I'd say I'd be surprised if it was anything less than 100 million.
Yeah.
But like next year, it's probably going to be 2 billion, maybe more. I think
That's
for like the
insane.
full
Yeah.
fiscal
Well,
year.
yeah.
So
That's
then
gonna
you're
be.
talking about 500 million per quarter, which
Yeah.
is like that's really meaningful, and
It's
it's growing
meaningful.
over time.
I think it's meaningful, but it's I don't think it's gonna move the stock a whole lot. I mean, over time, maybe in a few years. I mean, we're talking about a stock that should be like let's say it'll be $1 trillion market cap company by then, and they're gonna be printing, 50 billion plus of revenue per quarter, like so an extra 500 million of profit. It's nice. It's a nice feather in the cap, but I think it's going to take a while for it to be like really meaningful to the stock price per se. Like I'm happy about it. I feel like it helps floor the stock. It helps create a floor for the
Yeah.
stock. But I don't think it's going to really in the order of magnitude, it needs an extra zero to be like, oh, well, that's going to move the stock up like that's going to be a big
Yeah.
valuation
So
bump for the stock, in my
it's
mind.
interesting you say that because I see like Harry Chu in the comments saying IRA will not be meaningful. But like to think about just the Giga Nevada plant, like I just said, they're doing 100 gigawatt hours of stationary storage at
Yeah.
$45 per kilowatt hour. That's $4.5 billion of incremental revenue
Yeah.
or of incremental
Yeah.
earnings. That's over $1 of EPS, maybe in 2025 by the time that's all scaled
Yeah.
out.
Yeah.
That like how is $1 not meaningful? Now, grant at that time maybe they'll probably be earning a lot more, but that's
Yeah.
that's a meaningful percentage. That's like over
Yeah, it's
10%
meaningful.
of the
I see
overall net income.
Farzad I see Farzad the kind of good point. 150 million is material when you're doing 3 billion net income. That's plus 5% to the bottom line. Think about it this way. Like if I had a lemonade stand business and I'm working hard, I'm making $3,000, a quarter, like profit. after all the work I'm doing, and then I got like some extra like tips that were an extra $150 per quarter. Yeah, that's nice. I'm happy about it, but it's not gonna like meaningfully change my business or how people are gonna like. I don't know. It's nice. It's gravy, but it's not. It's a little bit of gravy. It's a little bit of icing on the cake, but it's not the $3,000 is like that's the thing, like the $150 tips is
Yeah.
like it's so helpful. Okay, I'll take it. Yeah, but it's not gonna like in terms of the stock price. What I'm saying is like I don't think it's
Yeah.
gonna move the stock,
So
the valuation of the stock significantly.
that I agree with you to a point, but maybe what we should have been talking about all along is FSD V11. That's probably, I think
Yes.
we
Yeah.
can all agree FSD is way more meaningful to the stock price
Way
than
more
the
meaningful.
IRA.
Way more meaning. That's like having the lemonade stand, and now instead of a person manning, I have a robot doing it and handing out the lemonade automatically to everyone for me. So I don't need
Yeah.
a person. That's a meaningful profit margin changer. And going to China, Elon going to China at the same time, they're going to be
Yep.
test driving this full self driving. Apparently, the reports that they're going to do like a mass full. I think there's a lot to this. I think Elon has a better relationship with the Chinese premier and the CCP and the, Shanghai municipal government official. I think he has a much better relationship with them than he does the U.S. government, except for Texas, maybe Governor Abbott in Texas or something. I feel like
Yeah.
Elon's relationship with China's government is way better. And I'm excited for him to take this trip. I think he's going to meet with some government officials. I think he's going to, you know, um, just improve that relationship there. Tesla China is a behemoth. If you're not like paying attention to Tesla China, like you're an irresponsible Tesla investor in my mind. Like you gotta like
Yeah.
people focus only on Tesla in US or maybe Europe, but Tesla China is like that's the elephant in the room. Like that's what's brought us to this valuation we're at is the Shanghai plant, the demand there, everything China, Tesla China. That's what we have to like really put a lot of apples into that basket to focus on that and follow people, find resources of quality information about Tesla China. If you want to be an informed and responsible Tesla investor, you need to know what's going on in Tesla China as much as possible. It's not easy, but you need to focus on that, right? I mean, I think this Tesla
Yeah.
China trip is going to be huge potentially for the relationship Tesla has in China.
Yeah, well, in they've said historically that the FSD take rate's like 1% in China. So, I mean, even if they only get to 5% or something like that, that's a really
Yeah.
meaningful improvement. Like that's still small, but like that would be a huge amount of incremental profit to Tesla. So this rumor that came out this morning that FSD is going to be released, FSD beta is going to be released in China. I was not sure how credible that report was. Did you see that?
Yeah.
What did you
Yeah.
think about that? Like bullish does that make you? Like, do you think Elon goes there and we have some sort of announcement and there's some like approval for FSD beta or something like that?
I do. I think that's possible. I don't think it's like going to be like an official announcement. I think he's going to talk to my gut feeling is he's talking to, the Chinese government officials high up. He hasn't been in China in years, and this is an opportunity for them to get to the table together and meet in person and have a nice discussion. And I think they're going to take it. They recognize Elon. Look at his mom, who just went to China and had like enormous fanfare, enormous crowds. Like you see those
Yeah, that was
reports.
awesome.
I feel like that was like fake news or so. I feel like that was AI generated, but it wasn't. It was like real. There was like tens of thousands of people showing up to her book signings and stuff. Like it's crazy. And so I think Elon going to China, I mean, not his mom, Elon himself is going to China. And I think he's going to be meeting with the top government people in China. And he's going to talk about a variety of things from maybe SpaceX technology to a little bit of Twitter. So I don't know, but I think Tesla's the main thing. And I think the full self-driving will be part of that discussion. And I think he's going to try to reassure them or something that, look, this is our technology. This is why we think we have the best. And I think we can do this safely and more massive scale and make China one of the leaders of this industry by moving this technology forward. And I think China is salivating to be the leaders of anything technologically. So I think that China government officials want to be the leaders in manufacturing and just technology in general, in any way they
Mhm.
can. And so it's sort of a competition for them to get ahead of the US in this. And I think this is going to be good. I think this is good. I think if the US government and official, the regulatory agencies, all that, see that China's adopting full self-driving and they're off to a good start with it, they're going to have the pressure on them to like be more friendly about it and not be as kind of like, you know, as constrictive as they are now about it. So
Yeah.
This is good,
Yeah,
all good in my mind, all good.
that's really good too. And we also don't pay very much attention to Europe here as much as we probably should. But I had an interaction with Florian Minderop the other day, who's one of the co-founders of Mr. Green, the electric car company or the car
Yeah.
leasing company. And apparently, there's some new legislative update in the works that he is incredibly bullish about. And I think he said that he thinks that the rules are going to change in 2024, could lead to very serious uptick, in 2024 and in 2025 for sure, of full self-driving. Because those, like the full self-driving product in those geographies is just like a neutered version of its like US, counterpart. So
Hmm.
like it kind of makes sense if I'm living in Germany and I don't know what the price is in Germany, 8,000 euros or something like that, to get something that's like basically just the autopilot on city streets where it won't do any turns and like has very limited functionality. Like I probably wouldn't pay for it.
No.
So, but once you can unlock the FSD capabilities, and plus by that point it'll be, on I don't know, version 13 or something like that. It's gonna be so much better than than it is right now. Like to me, it just seems like foolish to assume that the take rates won't increase. Now maybe it won't all be upfront purchases. Maybe it'll be subscription based more so, just because it's kind of hard to spend 15,000 all in one upfront payment. But when you're really looking out in like the medium term, I find it very hard to imagine that FSD take rates don't rise into something like mid-teens or even higher. But we haven't even modeled that in our in our base
No.
case.
Yeah. I mean, that's the exciting thing is once they get some massive like testing on the roads there in China, then instead of 1% take rate, anything's butter. Anything's like great for the Tesla margins, and that'll
My son loves
offset some of
butter.
these. Yeah, I saw that picture on Twitter. So I mean, that's sort of like what if I ever have bread, I now just have a little bit of bread and I douse like a ton of butter on it, like a big butter stick on a piece of tiny bread or
Salted
something. So
butter. Got to go
I like
salted.
salted, yeah, and I even pour extra salt on it sometimes, sea
Malted
salt,
salt. That's the way to go. Yeah.
yeah, yeah. So, but I think the 1% take rate of Tesla FSD in China obviously is going to go up, whether it's 3%, 5%, or 15%. Like all of that above 1% is just like pure margins, and the existing fleet of like what do they have, like 1 million cars in China already on the ground, something like that, probably close to it, if not. And
Yeah.
so of that existing fleet, maybe 10% of those people also take on full self-driving pretty quickly, and pay for it. So this is going to be great for margins for Tesla in the coming quarters. That'll hopefully offset the further price increases we're anticipating they're going to have to do in the US to pick up more
Yeah.
demand in the US. Unfortunately, because they refuse to advertise. So, and educate the public. They just want to cut prices and leave
Yeah.
it to the grassroots efforts of us to educate the rest of the public. So anyway, I'm not bitter on that, even though I sort of am. Let's,
Yeah, it's
yeah,
maybe one last thought on this too, because I
yeah,
think it's so important and it's been a part of the thesis for so long, but it just hasn't panned out yet. So I think there's a tendency to just like ignore FSD, like Gary Black does, and I kind of get that. But like at some point, like I think they're getting to the point they're at wide release now in the US, where they
hmm,
can actually do like maybe wait another 6 months or something, get it really safe, where somebody who's never driven FSD beta before can get in and not be like scared by it, and it'll work
yeah,
for the most part, but they know how to take over. I think we're going to get to that point in the next 6 months or so, and whenever they do get to that point, I really fully expect them to give like a free trial to everybody who hasn't bought it. Because well, why wouldn't you? That's just
yeah,
like you've got a chance to upgrade 4 million cars or however many it is, and just like take your shot. And whenever they do that, even if it's like a low, like if only 5% upgrade, like that's still going to
hmm,
be an absolutely massive amount of earnings that would flow through. So I think this really is a kind of bullish catalyst that's going to show up sometime in the medium term.
yeah. I think so too. I'm excited for the free trial they'll allow. I think they will eventually allow for free trials if it doesn't pick up enough steam on its own from word of mouth from anyway. So we were going to talk about a bunch of bullet points of some sophisticated Tesla bears we've talked about, and kind of rebut and talk about their points of why Tesla's way overvalued, but we were going to rebut it. But I think we're running low on time. Maybe we'll save that for next week when we think the Tesla stock price could be lower than where it is now next week, and we'll need a little morale boost to everyone following us of why Tesla's worth a lot more in the long term than where it's at. So hope I'm wrong and Tesla's up next week versus this week. But I feel like the next two, as we talked about earlier, the sentiment going into the earnings report is going to be somewhat negative before it reverses after the earnings report. That's my suspicion. So we'll go into Q&A, I guess, for now. We got about 15 minutes here. Let's see. Alec will post some Q&A here. First is from Apple Linux on Twitter. What is your updated earning per share given the new PD numbers? Any expectations of the stock price move after earnings report on the 19th? I mean, we sort of talked about that a little bit. Matt, do you want to just, for people that missed it, maybe?
We did touch on that already. The updated number was 85 cents. We'll probably go through one more time and do like a final version of it. But yeah, 85 cents is where I am right now, which is basically right where Wall Street is. So that's kind of the new figure. In terms of expectations of stock price, I mean, it's so hard to say on a short-term basis. But Emmet did say in the short term, kind of leading up to the production and delivery report, he could see, or the earnings report, could see it dropping as low as like 160 or 170. But you can't, like, it's very hard to say what the stock price reaction will be after the 19th.
Yeah.
Because hey, if they post $1, I bet it'll be a great reaction. But if they come in at 70 cents, I bet it'll be really bad. So I think the numbers, I'm expecting something muted personally.
Yeah. I think that it's going to all depend. All eyes are going to be on the automotive gross margin X regulatory credits. So my guess is over 20%. Very positive sentiment change in a good way for Tesla from earnings report going forward. If it's below 20%, maybe it's more negative, or below 18%, definitely, I think it would be negative. So let's go on to the next question here. Tesla Uber ride on Twitter. Does Elon believe Rivian and Ford are making a good faith efforts at supporting Tesla's mission? If so, will Elon intentionally slow the Cybertruck ramp to ensure Rivian and Ford survival? What do you think, Matt?
Yes and no. I mean, so Elon's been, I think, maybe he hasn't been directly complimentary of Ford, but he definitely seems to respect Jim Farley, and I think he's been very kind of cordial with him. He's been critical of Rivian only because like their manufacturing sucks. Like this is something before they were public, before they released their figures, they were talking about all these specifications that they were going to have and all these different options. And he said something to the effect, he tweeted something to the effect of the negative gross margins are going to be staggering. And sure enough, the first like quarter of production, they had like a negative 380% gross margin, something just like ridiculous like that. Tesla, and like the worst quarter they ever had in the middle of the Model 3 or the Model S ramp, like they were talking about like negative 20% gross margins. And like even today, after so many, like, what are they, a year and a half of ramping now or something like that? They're at like negative roughly 100. I forget. I think they're like maybe negative 115. So you're selling, just for math's sake, $100,000 car, but it costs you $200,000 to make it. Even still, after like so long of ramping, like that's like slowing your Cybertruck ramp to like help that company survive doesn't accelerate the transition to sustainable energy. So like I hope Rivian makes it, but they suck at manufacturing and they need to just own up to that and change something, because like really improving from here to get to negative 50% gross margins still doesn't cut it. Like they've got like, so long to go.
They suck at manufacturing efficiency. Like I think the quality of their product seems to be okay.
The quality's fine,
but the actual costs, the costs, their efficiency is terrible with their manufacturing.
Exactly. It's not that they don't manufacture a good product. Like one of the big criticisms of Tesla was like panel gaps or whatever, but they were still making positive gross margin when they had those issues, and then they kind of sorted them out in real time and got it better over time. But Rivian's just in so much of a different spot because they were just burning cash like crazy right now.
Yeah, that's crazy. And I think I've seen more Rivians around, and people seem to be happy with them. I've talked to a few people that had them for a while. I don't think the charging experience on road trips is very good for any non-Tesla, including the Rivians. But minus that, I think the Rivian is probably a pretty good product to own and use, if you like trucks and you want a good quality truck, So The Cybertruck is going to be big trouble for the Rivian, though, I think, in terms of demand. Like, Rivian's going to have a really tough time keeping their demand going when the Cybertruck comes out. So maybe we got to look at shorting that again soon enough if it comes up. It might be a good short. And not that I want Rivian to lose, but in terms of making money, you got to find some shorts
Yeah.
occasionally to offset
Yeah.
some
I mean,
longs, maybe.
I think they're probably going to have more success with the Amazon delivery vehicle. Like that's a much more simple product, way fewer
Yeah.
moving parts, and there's a
If they
good
can get the
market for it. And
manufacturing costs, they got to
yeah,
figure out the manufacturing costs. Yeah.
they still got
Yeah.
to figure that part out for sure. But like
Yeah.
that's like a very big need. I mean, how long would it take to just replace the whole fleet of Amazon? And they're trying to go non-exclusive too. So like if you can sell
Yeah.
a UPS truck and a FedEx truck, and like that's a huge market for them. And I wish them every success in addressing that, because that really would like accelerate the transition to sustainable energy, but do so
Yeah.
profitably, because otherwise you're not sustainable, so you're not actually going to help.
Yeah. All right, next question from Farzad in the YouTube comments. How you doing, Farzad? Farzad is doing great with his channel. He's really growing it and putting
He's
together good
killing it.
quality stuff. Yeah. Question: if Tesla's average sale prices are above 47,000 as Zach guided, this means Tesla needs 1 to 2%, 1.2% reduction in cost of goods services to hit 20%
Cost of goods
margins.
sold.
Cost of goods sold. Sorry. Am I crazy, or does it seem margin could surprise? Is that right? So average sales price above 47. Is that true that it needs just 1.2% reduction in cost of goods sold to 20%? Does that seem right to you, Matt? Does it seem Matt,
That
or we
seems
have to
about
double
right.
check that, I
I
guess?
didn't check the math, but that sounds about right. But yeah, I mean, so then you're talking about what is that, like about $500 cost decrease, which is exactly what we were modeling actually,
Hmm.
Emmet, when we did this math last week.
The
Um,
conservative model,
the,
sort
cons-
of. Yeah.
well, like it was our base case, but yeah,
Yeah.
the base case that we had in there was the $500 COGS reduction. Um, so that seems very reasonable. I do think I think there's a lot of really positive cost of goods sold tailwinds coming into this year. Um,
You think it's gonna hit
we talk about
Q1
them.
though, or is it gonna take a little while longer?
I think it'll start in Q1. That's why I think 500 is a reasonable estimate for Q1. But lithium
Yeah.
prices are down significantly from where they were last year, and that's by
Yeah.
my math. And Mad Manx, who we've interviewed on here at Mad Manx 89, does some really great stuff too. He's estimating that's around $2,000 at the kind of peak prices that they were last year,
Per car, per
and then
battery
per
car. Yeah.
car, yeah. And so those are down like in half right now. So now Tesla's contracts and how those will roll forward, it's remains to be seen. But falling lithium
Hmm.
prices is definitely really good news for cost of goods sold. And then I think just factory utilization is another one. I mean, even in Q1, I don't think we'll really see a whole lot of that benefit, because Shanghai was down for Chinese New Year and for the Lunar Festival or something like that in February.
Hmm.
Um, and you're still kind of ramping Berlin and Austin. So I think there's going to be some improvement over Q4. But I think really in Q2 and beyond, you're going to see a lot of kind of cost of goods sold improvement from there. And so I think you could see like $3,000 cost of goods sold improvement by maybe Q3, Q4. And so to Farzad's point, yeah, I think they could surprise.
Yeah, that's what we're
But
hoping.
this was a floor. Keep in mind, like Zach was like directly asked the 20% margin question, and he said we are modeling it to be higher than that. So, you know,
Hmm.
um,
Hmm.
that was
Yeah,
like a direct kind of coy response. So I'm not expecting 20%. I'm expecting at like 22%, something like that, I think.
that'd be nice. Yeah, yeah. I think that would surprise a lot of people that are like all the sophisticated bears. That would help convince them. I think as well that you know reducing prices was acceptable. That they are offsetting that with some improvements in manufacturing efficiencies and such.
Yeah.
So yeah, next question. Let's see here. From Andrew Bazile. How you doing, Andrew? Would you agree there's potential for political backlash as to the IRA credits if Tesla is routinely getting billions in benefits? Seems there could be pressure to roll back. I do think if the current administration stays in power, I definitely think that it's an election cycle coming up, I don't know if they can change much about it, but if there's a new administration more supportive of Elon and Tesla, then I don't think it is going to hurt as badly. But I think if the current administration were to stay in power, and the House, Senate, and we're all Democratic, like AOC people, Elizabeth Warren people, like, Bernie Sanders, people that seem to like villainize Tesla and Elon, they get voices more heard. And I do think that is a risk. What do you think, Matt?
Yeah, I completely agree. But will it be like an effective one? That I'm less certain of. Like, will Elizabeth Warren point out that Tesla received $1 billion of tax credits, at some point next year? Like, yes,
The betting
100%.
odds
Like,
are very high on that.
very
Yeah,
high.
80%, 90% betting odds on that. Yeah.
But so the more interesting question to me is like, what happens? Like will there be a change to the legislation that rolls those back? Will there be like customer backlash where, like, some percentage of people who really like Elizabeth Warren's point of view say, oh yeah, like, I'm not going to support that corrupt billionaire, so I'm going to buy my, like, a Ford instead.
Yeah.
I think the actual impact for Tesla on like those types of things is probably pretty small. I don't expect Congress to roll back the legislation, and I don't expect a material change in demand from people who just are politically opposed to this. So I think it will happen for sure, but I just don't think it's going to matter.
Yeah. Next question from Blake Anderson in the YouTube comments. Question: thoughts on Rocket Lab's new strategy not to use a helicopter catch, but to get the rocket from, I'm assuming
The
just to get it from the
C,
ocean, from the
yeah,
sea, like when it drops. So I think this is for the Electron. I don't think this is the strategy. The Neutron's supposed to just land, like,
yeah,
but the Electron strategy, to me, I think the stock isn't moving on anything with the Electron. I think the stock, if and when it moves up, it's going to have either to do with, Rocket Lab's a very different story than other stocks. It's more like investing in venture capital, businesses or something, but you're doing it in the public markets. And to me, to get the valuation change for Rocket Lab, you need either Starlink to go public, or and whisper numbers of the valuation of Starlink and excitement around that, and then people searching to see what else is there, just like Rivian and Lucid went up like crazy when Tesla started getting
yeah,
to new valuations. I think that's one thing that brings up Rocket Lab's stock valuation. And the other thing is the Neutron development and how competitive it is with the current Falcon 9, and Starship's going to be a completely different class in terms of cost effectiveness. But I think the Neutron will be a very good bridge for smaller needs, because I think SpaceX is going to just only focus on the Starship going forward anyway. So I think Neutron moves the needle, yeah, but I don't think anything to do with Electron really moves the needle on the stock price, other than giving Rocket Lab much needed more experience in how to be nimble with rocket science and
yeah.
recovery and such. What do you think, man?
Yeah, so I completely agree with everything you said. I mean, it's not a super important from a valuation perspective, but it does give them a lot of kind of technical knowledge. The thing that I really like just is like putting the investing piece aside. I think it was really interesting that they kind of learned a lot of the same lessons that SpaceX learned, of like they had a plan to do it one way, and just decided that they were gonna. It didn't make sense to do the helicopter catch. I mean, one, it seemed like there was potentially a safety issue with the way that it was being handled in the helicopter once it was actually captured, which you can't really simulate just how bad that is. And imagine what would happen if, like, God forbid, the helicopter crashed or something like that, and you lost a life on an unmanned mission. Like, that's just not a risk worth taking. But the interesting thing that I think they're learning a lot about refurbishment right now, and about, frankly, just like the performance of their vehicles, which is really helpful from a just technical standpoint. You can learn a lot, and SpaceX has proven this, about the design of your vehicles when you see them kind of push to their absolute limit. And so returning through the atmosphere, which Electron was not designed to do, and being submerged underneath salt water, which Electron was
Yeah,
definitely not designed to do, and still being able to
yeah,
fly again. You learn a lot, and you say, okay, maybe we don't need to design it to this level. Maybe we can, like, save on weight by, like, reducing the coatings or whatever. So I think from just a pure technical standpoint, there's a lot that they can maybe learn. And then on the cost side, they spent more than I think they were planning to on developing this helicopter catch. What was it? I think it was Q4, maybe it was even Q3. The costs were just a lot higher than I was expecting on the O&M side, and I think a good chunk of that was the R&D, not only for Neutron, which was expected, but for this helicopter catch. I want to say they spent like $10 million or more on the helicopter catch, which for a company of Rocket Lab size was just frankly too much. So
Yeah.
I'm very happy for them not to be spending that kind of money on this again.
Last question. We'll do one more question. Already 10 for almost an hour and 10 minutes here. From Jay Lizard on the YouTube comments. Question: should Tesla get ugly and aggressively advertise on Twitter? I don't think they need to do any more on Twitter. I think Twitter is sort of maxed out, like in terms of Tesla branding, Tesla information. I think they need to do more on other mediums. And I think Elon uses Twitter. I don't know why he's not thinking about traditional TV. I mean, I know it's not the future, but I would speculate over half the general population, most of the media they consume is on the traditional TV, and a lot of these are older people, and these older people buy cars too, and they're probably curious about EVs. I know, my mom and some of her friends have been curious and have ventured in, and some of them are buying, they're looking into EVs from other dealerships. They don't even think Tesla, they just think of Tesla as one of many options. They don't even think Tesla's like the main option, so I think there needs to be better education amongst older generations through traditional advertising. That's what I think. But I don't think Elon, it seems like he's getting that message to do that.
Yeah, I completely agree. I mean, Elon's already pretty effective at promoting Tesla on Twitter. I think if Tesla were to spend, millions of dollars on Twitter, you could have accusations of nepotism, which could come back and bite them. And I think Tesla's already so well represented on there, and you could probably reach more people cost effectively just by having Elon tweet stuff. So yeah, I agree with you, Emmett. I think going on other platforms is definitely the right way to go rather than just on Twitter.
Yeah. And Jay Lizard, to be fair, he has a rebuttal to our rebuttal in the comments that says he respectfully disagrees. He thinks it would be good for Twitter and Elon and Tesla to encourage others to advertise there by showing that they're spending money on Twitter. I mean, there's a point there, but I think it could easily get framed the wrong way as well. So it would be, yeah.
I think so, and it's the appearance of nepotism that matters more than whether there is actual nepotism or not.
Yeah,
So
the reporting on it would be terrible. It could be catastrophic.
Yeah.
Yeah,
And so
Elon,
I would prefer.
Yeah,
I'd prefer it just goes on other platforms, but maybe if you were to say like we're going to spend X amount of dollars and we'll allocate 5% of the overall marketing budget to Twitter, maybe, but I still think you're going to get attacked for doing that anyway.
Yeah.
So I just prefer to see it in some other venues.
Yeah, it's sort of like there wouldn't. I don't think there would the potential for conflicts of interest. I think it would get muddied. The waters would be muddied. I don't think there isn't a conflict of interest, but I think people would interpret it as a conflict of interest, even though that's probably wrong. So yeah, I just think it could get reported the wrong way and just connect the dots wrongly in the media of what people are being told about Elon using Twitter for his own businesses now or something,
Yeah.
So
yeah.
So anyway, Zuma 92, any thoughts on Roblox? Yeah, we got to talk about Roblox sometime soon. That stock's been holding up okay. I think I'm excited about Roblox's future, and I kind of wonder how the ChatGPT technology is going to, interplay with Roblox developers and such. So yeah, I'm curious, and I got to dive into that more. But we'll talk more another time about that. We got to go. It's been an hour and 12 minutes here. So we'll see you guys next week. Same time, same place. And thanks for joining us. Hopefully I'm wrong, and Tesla stock will not be further down in the dump, be further down than where it is now next week from sentiment going into earnings. But we'll see. All right, guys.